Have you ever thought about how a slowdown in US jobs, China's economic policies, and rising prices in Europe can affect your daily life? From the cost of groceries to your investment portfolio, these global events can shape more than just headlines. Every week, Deloitte's global economists share key updates on what's really happening with the world's economy. And this week, three main stories popped up: job growth slowing down in the United States, China's new developments, and rising inflation across the Eurozone. Let's break them one by one in very simple and easy to understand words and discuss why this really matters for you. So let's get into it right away. The American job market, which has remarkably strong over the last few years, is starting to lose some steam. According to Deloitte, the US added around 868,000 jobs in the last 4 months of 2024. Fast forward to the first 4 months of 2025, and that number dropped to 491,000. Most recently, in the latest 4-month stretch, only 107,000 jobs were created. To make it more concerning, the month of August just saw 22,000 new jobs, which was definitely the weakest showing in recent memory. Even earlier numbers were revised, with June showing a loss of jobs, while July got a small upgrade. But why does this all matter? Well, job growth is one of the clearest signs of economic health. When people are working and earning more, they spend more, which further helps businesses to grow. But when hiring slows down, the consumer spending shrinks, which makes the businesses more cautious. So investors, consumers, and even policymakers are all watching closely because fewer jobs can hint at bigger challenges ahead for the US economy. The second big story this week is about China. Even though Deloitte didn't dive into many details, it's still worth paying attention to developments there because of the country's huge role in global economy. China is the world's biggest manufacturing hub and a key driver of global trade. When China adjusts its economic policies, changes its growth targets, or faces slowdowns in consumer demand, the effects ripple across the globe. For example, slower growth in China can mean weaker demand for raw materials, which impacts exporters in countries like Australia or Brazil. It can also affect prices of goods that rely on Chinese factories, from smartphones to industrial equipment. So in short, what really happens in Beijing doesn't only stay in Beijing. It can affect global supply chains, investment needs, and even everyday prices of grocery items in your local stores. The third headline comes from Europe, where inflation has picked up speed once again. Deloitte has noted that the prices in the Eurozone are rising faster, which is making the life more expensive for millions of households. Higher inflation means everyday essentials cost more. For families already struggling with higher living costs, this creates even more financial pressure. But it also pushes the European Central Bank into a difficult position. Do they raise interest rates further to control inflation, even if it risks slowing down the economy? Or do they hold back, hoping inflation cools naturally? The decisions made in Frankfurt can influence borrowing costs, mortgages, and investment returns across Europe and beyond. And since Europe is such a large trading partner with the US and Asia, its inflation struggles often spill over into global markets. Closely tied to the slowdown in US jobs growth is the question of consumer confidence. When people feel secure in their jobs and see steady income growth, they are more likely to spend on big purchases, like homes, cars, or vacations. But when job creation slows, households often become more cautious, cutting back on non-essential spending. This has a ripple effect. Businesses see weaker demand, which can slow investment and hiring even further. Consumer spending makes up the majority of the US economy, so shifts in confidence can quickly determine whether growth continues or stalls. Simply put, when workers feel uncertain, the whole economy feels it too. When we look at these stories together, a bigger picture emerges. A slowdown in US jobs hints at a cooling American economy, China's uncertain path adds to global caution, and inflation in Europe shows how fragile recovery remains in developed markets. So in other words, we can say that the global economy is at a delicate crossroads. Growth is slowing in some places, costs are rising in the others, and the decisions made in Washington, Beijing, and Brussels will definitely set the tone for the months coming ahead. So, what can you take away from this week's update? First, keep an eye on the US job market because it's a reliable signal of where the economy might be headed next. Second, watch China's economic direction since its choices can ripple through global supply chains and trade flows. And third, don't ignore inflation in Europe because the fight against rising prices is far from over. The global economy may feel far away, but its effects show up close to home, even in your grocery bills, your job opportunities, or even in your retirement savings. So now I would love to hear from you. Which of these three stories do you think have the biggest impact on your life? US jobs, China's economic policies, or inflation in Europe? Comment down below and let's talk about it.